Want to use a PGR in your cereals but have no time for a separate pass? Manipulator PGR can be applied as early as one tiller. Just add it to your herbicide to reduce lodging, increase harvest efficiency, and maximize yields. Talk to your retailer for more info and to confirm acceptable tank mixes.
Okay, I know I mentioned some of the tax changes will be presented by Finance Minister Chrystia Freeland on Tuesday in the budget. Here to talk about specifically for sure the capital gains changes. I think that's really I've had a lot of emails this week from the audience not happy at all, like at all. I'm moving my farm to Montana. I've had two of those. Um, Joining us is Ryan Carrig. He is National Leader for Agriculture Tax at MNP. Hey, Ryan, welcome back to the show.
Well, thank you for the invitation, everyone.
Yeah, is this like Christmas for you? Federal budget week? Do you look forward
I
to
think
this?
I think we usually have happier Christmases, but we'll go with that.
You know
But
what?
no,
That's good.
there's always a lot going on this week, and you never know what you're getting into until you get there, and then you deal with what happens afterwards. And I'm
Yeah.
probably fielding the same amount of phone calls you're fielding right now, there, Sean.
Yeah. Okay. So from a tax perspective, is the changes suggested on the capital gains, is that the most significant piece in the budget this week when it comes to taxes?
The capital gain inclusion rate change is by far the largest impact, the largest tax item in the budget this week. Probably the largest tax item that we've seen in years, maybe even a decade in Canada here, because it was really interesting how it came up to be this year. Because every year there had historically been a lot of chatter about the capital gain inclusion rate changing, but it seemed to have died down, and it was kind of almost a sleeper going into this year's budget. And lo and behold, this is the year the inclusion rate changes. So I think it caught quite a few people in the industry, not as a out of left field, but just as a surprise that this was the year that it finally happened.
Do you believe they talked about how few Canadians are actually impacted by this change? Do those numbers make sense to you?
Uh, it's hard to tell without having the full background story on it. I think you're referring to the 0.13% number and so forth,
Yes.
maybe impacted by that. I think that might be reflective of who's impacted on an annual basis, but there's going to be many, many Canadians that will be impacted in specific years, whether it be in a non-farm example through the transferring of a property or a cottage or selling a rental property or anything like that. So it is going to impact more Canadians, I believe, than what the numbers actually indicate, but maybe not on a year-to-year annual basis, but especially for those one-time life events.
What's the biggest consequence to Canadian agriculture based on this inclusion rate change?
Oh boy. Okay. So there's a few ones to really look at there. The biggest one that I see in the short term right now is going to be those people who are considering selling their farm maybe in the next year or two, depending what their specific numbers look like here and how much lifetime capital gain exemption they have remaining. And we'll come back to that later, the lifetime capital gain exemption here. But their financial planning situation may have changed here depending on their specific numbers. They may have done the math, realize this is going to leave me with X number after tax income, and that's going to go on and fund my retirement years here. Well, those calculations may need to be revisited now to see where that leaves them, and if that mom and dad in my example are truly ready and financially secure enough to want to retire at this time, or whether or not they feel like they need to put in a few more years. So that's the short immediate impact where I think it's going to be seen. We're also going to see it, I think, a little bit in terms of the succession impacts here. We're going back to my example again, where we'd have mom and dad that want to have an X amount of dollars to fund their retirement. They plan on selling the farm to the farming kid, to the successor. They're going to gift anything over and above that number that they want to have here. Well, if mom and dad want to have X, let's just say $3 million again to fund their retirement here. If they want to have $3 million after tax, they're probably going to have to sell more share equity to their kids at capital gain rates to trigger that 3 million after tax. All mom and dad are really concerned about is how they want that 3 million. That's going to fund their retirement right there. So the kid, there's probably going to be more skimmage, I guess, for lack of a better word, of taxes being paid to the government to leave mom and dad in that position here. So it may make it a little bit harder on the incoming generation, the younger successor generation, to have to generate the cash flows to have those funds available to pay out mom and dad here. So I do see there being a tightening for the younger generation in that regard.
Okay, let's go. Tyler, you got a question for Ryan?
Yeah, I'm curious, Ryan. So the government gave everybody notice on this change, which they don't normally do with tax changes. Do you think that there's going to be some fire sales between now and the 25th of June when the change comes into effect?
That is probably the number one question I've been getting is what is the magic with the June 25th date? And I did because a quick calendar searching, it's a Tuesday. It is just the most bizarre of random days. So I have no insight on that date.
Well, you missed it, right? It happens to me on my birthday. So I think this is the gift that the federal government gave me, tax increases on your birthday. But, do you think people will rush to liquidate some assets?
I do think there's going to be different type of transactions. Like the first ones where there's potential sales in process right now, there is going to be a renewed focus to try to get those closed ahead of that time. But you also have to be aware that any purchase and sale agreements, purchasers are going to know now that there is also an arbitrary deadline and tax rate. So there's going to be a little bit more negotiation perhaps, and it may not be as easy to close these type of purchase sale agreements that we see there. I think we're going to see a lot of people come and have discussions with their tax advisors. In my first scenario, like we were thinking about 2-3 years. Is there anything we can do now to maybe crystallize or lock in some of these gains ahead of time?
Yep.
Yeah. That can be a very loaded question because there's a whole lot of tax legislation that's changed in the last year or two, and that'll be very client specific. And a lot of those questions are ultimately going to come down to what kind of lifetime capital gain exemption is left in this scenario. But nothing imminent. The one we'll probably see a lot of is holding companies like portfolio investments. Like if you have a nice healthy gain realized on Royal Bank, maybe you want to ring the register and lock in your capital gain on your Royal Bank stock at the attractive tax rates here, particularly if they're held in a holding company.
Lindsay, you got a question?
I just want to add something.
Sorry. Brian, go ahead.
Yeah, go ahead.
Yeah. One issue I think you kind of asked what impact this might have on the ag sector. It's pretty common in a lot of our farm structures that there are holding companies set up where you move excess profits over. It's kind of like a rainy day fund. Okay, it really is what it is. It's part of the whole ownership structure. And the reason we do this is because in order to be on side of the farm rollover rules, and those are the very important ones that allow you to transfer your farm to the next generation on tax deferred, and for your capital gain use, you can't be stockpiling excess cash in the operating company. So a common tactic is to transfer this cash to a holding company, and this holding company will earn investment income. Now, a few years back, I guess maybe 5 or 6 years back now, some legislation was introduced where if your holding company starts to earn more than $50,000 of passive income, think investment income, dividend income, capital gain income, the operating farm company will start to see its access to its small business deduction ground down. Okay. So no longer would they get the cheap corporate tax rates that everyone thinks of when you think of small business corporations. Well, these capital gains, they used to only be taxed 50% in that calculation. They're now going to jump up to 2/3 post June 25th. So it's going to put even more pressure to stay on side of not having more than $50,000 of this passive income. So I think a long-term effect of this is going to be as potential restrictions or grinds to farming companies' small business deductions here. So, and you think about it materially, nothing has changed. It's the same portfolio, same gain that you had the prior year, just the mechanics of how this calculation works now. So.
Mm-hmm. Yeah, that's sort of, so maybe I'll defer to Calvin because that was, I guess, one of my questions, and I think there are many questions yet to ask and a lot that will sort of be figured out in the next couple of days. But from the perspective of, so let's say you are the succeeding generation and you are in the midst of a farm transition, to me this feels like a rather large wrench being thrown in if you are well into a plan, for sure. So how important is it, or what are some of the questions that farmers or generation should be sitting down with their accountant to talk about when it comes to this question?
Okay, so we've really focused on the capital gain inclusion rate change here, but there was a positive announced here as well, which was the bumping up of the lifetime capital gain exemption by roughly $250,000. Of course, that bump up doesn't actually come into play until the new inclusion rate comes in, so it happens at that time. But that is a little bit of a softening blow to the situation you described there, Lindsay. So if we go to how that looks, that will actually help mom and dad on transferring more value or extracting more value from the farm on a potential tax-free basis through the use of this exemption. Because even if they didn't have any before, they are getting some more. But it's ultimately going to come down to the size of the farm that we're talking about and the payment terms, payment structure that mom and dad want to get out. If the successive generation and mom and dad agree that they want to fund this payout over 10, 15 years, there's probably some things we can do to help mitigate or soften the blow of this. But if you get situations where mom or dad are looking for a large upfront cash, That's definitely going to throw a wrench into their plans. And this is going to have a very big impact on the overall estate planning considerations for farms and going forward here. Now, if the farm is still carrying on and transferring to the next generation, the farm rollover rules still apply. Nothing has changed in that regard. But when you start to think about how perhaps non-farm siblings are sometimes handled in type of like estate planning, sometimes they're left with the whole co or other forms of assets. Well, the farm traditionally or sometimes still mostly transfers to the farming children. Well, those holding companies now have an entirely different tax burden being thrown at them here, where when mom and dad had, sat down, thought this is what they thought was fair and equitable, and they came to this. Well, those plans are going to perhaps need to be revisited now, because the eventual rates that the non-farming children are going to receive on that, there's going to be less after-tax proceeds in their hands. So perhaps mom and dad are going to have to revisit what they think is fair and equitable in light of some of these considerations.
Okay, Kelvin?
I think Tyler dug up the number from Agriculture and Agri-Food Canada of the average net farm net worth being just under $4 million. So we, of course, you mentioned the 0.13% of Canadian individuals being affected by this, according to the federal government. And I think it was around 12% of corporations they're anticipating will be affected. Just to give some context here, Ryan, how significant a portion of farms across Canada do you see being affected by having to pay more tax because of the changes to the capital gains?
It's really going to come down to the life cycle of where they're at. There's a lot of farms that are just continually in expansion mode or growth mode. They aren't necessarily into the whole investment picture here with the use of holding companies or not, because they're using their after-tax funds to fund the expansion of the business here. The ones that are traditionally more have acquired everything they want to, they've serviced all their debt, they pretty much, or sometimes there's debt-free farms. Those are the ones that are going to have the excess cash, where they're going to feel more of the impact on it. I really think it's going to hit, in terms of farms, the retiring farmers with no succession plan. That is where it's going to change the dynamics of what they're looking for in terms of that. Okay. It may also cause a little bit of a, there could potentially be a rush in the farmland market. I'll go through this. Is like, if somebody was considering selling their farmland, they, depending on the size, quantum, and the amount of capital gain exemption they have remaining, they have a motivation maybe to sell it before June 25th.
There's an unintended consequence. Okay. I think, Tyler, do you have one more question?
Ryan, the theme of the budget is around fairness for every generation. I'm curious as to how much harder you think that these changes are going to make it for that next generation of farmers trying to get into farming. In my mind, it doesn't seem like it's actually, I mean, I guess it's fair because it's making that older generation pay more, but it's going to make it more expensive, tougher for the new generation trying to come in. What are your thoughts on that?
I do understand the angle that you're coming from there, Tyler, or the suggestion there, because it is going to make it potentially harder for the younger generation to buy out their mom and dad's equity in the farm. If mom and dad want this set number of dollars. Now, it's so much of this is going to be fact specific, because so much of it comes down to the lifetime capital gains exemptions of mom and dad and what other options may exist. But in a scenario where the lifetime capital gain exemptions had already been used up prior during the lifetime through a variety of other means, to get mom and dad the X number of dollars that they need to, the cost to get that has now increased to the younger generation coming up. And I hope that doesn't become a barrier to entry into farming anymore. There is a succession-ish challenge looming on the horizon through lots of RBC surveys and so forth that have come out over the past couple of years. And I hope this doesn't disincentivize anybody from wanting to do it, that they're still interested in pursuing a career in agriculture because of this. So, but that is a potential fear that I have been hearing. Whether or not it actually plays out, or we'll have to wait and see over the long term.
Hey, just shifting gears here real quick. Do you have perspective or thoughts on the small business carbon tax rebate and some of those changes?
Yeah, so when I was in the lockup room reading through that, that did catch my eye right away here. It's interesting. It's very vague on details of what this is actually going to encompass. Like, there was no legislation to give it any enactment to this or draft legislation proposed. Really, it just indicates that corporations in Canada are going to receive a portion of a carbon tax rebate, essentially based on the number of employees that they have in the organization. There is a cap. If you have more than 500 employees, you're not eligible for this, or a variety of other caps, but it's really targeted at the small and mid-sized businesses in Canada. There was no indication on how this will interact with the existing farm return of farm fuel charge proceeds that farms currently receive when they, as a tax credit when they file their corporate or individual personal tax returns here. So I was looking for that if I could see any tie-in, but the details are pretty scarce right now. So I think that's something we're gonna have to wait and see how it comes out. So, but I'm sure it's welcome across other industries other than ag as well, just to see these funds being returned. I think that it has always been an issue with the program that the funds were supposed to be returned, but I'm very curious to see if this is how this impacts the ag one, if this is an add-on or if this is specifically just affect other industries. And I guess we'll have to wait and see because I was looking for additional information. I couldn't find anything anywhere outside of the budget documents on that.
We've asked Finance Canada too, and judging by their initial response, I'm not convinced that anybody had thought of the potential for overlap here. So they said they're going to get back to us on it.
And again, I think that speaks to the fact that this is probably not a good thing or not seen as a good thing for farmers. If they thought it was a good thing, if they thought it would deal with some of the issues around 234, they would be communicating it like that. And the fact that they aren't, either is a big oversight of a politically sensitive issue for the government, or just speaks to the reality that it's not fixing these other issues that farmers across the country have.
That's a great observation, Tyler, and I feel like I'm 50-50 on which one it is. So would love to know what other people think. I think it could go either way.
It wouldn't be the first time, though, they've done something that's beneficial to the industry where they just don't talk about it.
I feel like, well, maybe they don't care enough to toot their own horn, I guess. But I feel like if they knew, then they would. So anyway.
Possibly. Go ahead, Calvin.
One more question for Ryan. I think it was last year's budget we had you on RealAgriculture talking about the accelerated capital cost depreciation measure. There was no word of any extension to that from what I could tell. Is that right?
There was nothing in the budget in that regard. So for corporations, I think 24, they're back to the old rules, not quite where it was back. There's so many different variations of this rule out there, but they're back to 2 times the normal amount of depreciation. So for a combine, I'll use $1 million combine example. In 23, a corporation could have expensed the full $1 million combine as a deduction. In 24 here, that same combine will now be at a 30% rate. So it'll be eligible for a tax deduction of $300,000. And in the future here, I can't remember if it's 3 or 4 years, it eventually will phase back to where it was way back in 2018, where that same combine would be only eligible for $150,000 of deduction. So we're on the downside of the slope from where the peak of where the immediate expensing was. For individuals or sole proprietors and individual partnerships, they still have immediate expensing here for 2024. The reason they got it 1 extra year is because they missed out on the first year when this was introduced by the government back when. So everybody had 3 years at it. So.
Ryan, to wrap up here, if you had a wish that the government would make from a tax perspective that you wish was in this budget, does something come to mind that you think would add to Canadian productivity, competitiveness, all of those things? Is there something that comes to mind?
This will be really nerdy, but we'll go for it.
Well, you are a tax nerd, so
it's fine.
Yeah. I hear it from my friends daily. Don't worry. So it's like the tax system is becoming incredibly complex. Like here we have capital gain rates that have just come in here. Your rate now depends on what entity holds the investment, what your personal income level is, because we didn't even talk about there's a personal income tax exemption where 250,000 of gains every year are taxed at the old rate. So no more do you have the certainty of a capital gain rate is taxed at a 50% inclusion rate. It's a variety of myriad of factors that come into this. And then we start talking about some of the other rules I mentioned, like the passive income and the $50,000 grind under small business deduction. It's becoming more and more of a maze for Canadians and farms to stay on top of their tax filings every year. And unfortunately, every year right now, it seems like we have more and more complex changes, not even bringing into account where I don't want to go like the whole UHT and Bear Trust reporting and all of these things, that there's just so many new things being thrown. It's becoming harder and harder for everyone to stay in compliance and even know what it means. And I'm not sure what the overall benefit of productivity is in some of these circumstances. Like nobody enjoyed filling out UHT forms and Bear Trust reporting forms only to have them scrapped at the last minute. So my one wish would be just a little bit more simplicity in the tax system, and let's just have the status quo for a while, and we'll consolidate. And if it needs to be revisited, it can be revisited later through discussions, but just less complexity, because we're tax geeks, we're tax nerds, and these things are racking our brains. I imagine what it works out, how it feels to other people in other industries as well. So.
Yeah, no, I don't think you're going to get any sort of argument from any of us on more simplicity. I think you've really you've hit that one home perfectly. Hey Ryan, thanks a lot for joining us. I know you're going to go away, and the panel's going to continue. So hey, thanks so much for joining us here today on Real Ag Radio.
Thank you. Have a great day, everyone.